Good afternoon, everyone, and welcome to Stock Market Today. You have Alyssa Corum and Ken Shreve here. We're going to dive into the market action today, provide you some perspective, and take a look at a couple of stocks, growth stocks, Ken, getting hit particularly hard in today's market.
Well, it was a day of sell signals, Ali, so we'll take a look at Nvidia, which reported exceptional earnings, but have a sell signal there, and also telemedicine firm Teladoc flashed a sell signal. And let's take a look at GM, which is still testing support at its 10-week line for the first time after a breakout amid a lot of carnage in the market. GM is still fighting a good fight.
All right, well, we'll check in on those. First, a look at the NASDAQ, the tech-heavy index, closing down 3.5% for the day, while the S&P 500 lost 2.5%. The Russell 2000 small cap index lost 3.4% on the day. The Dow, the least hard hit, down 1.8%. So, Ken, what happened today, I feel like, was almost what we were maybe expecting to happen Tuesday, at least intraday. Tried to put up a bit of a fight at that 50-day line, but now closing below that level for the first time in a very long time in a very dramatic fashion.
Yeah, you know, the culprit here is surging treasury yields. The market does not like it when bond yields start to soar, and 10-year yield has been moving higher for a while, but it's really ramping up the pace. At last check, it was up 14 basis points today to 1.52%. So you've got the bond market maybe flagging some inflation down the line for the economy, but you also have Fed Chairman Jay Powell, who just concluded 2 days of testimony on Capitol Hill Tuesday and Wednesday, saying that inflation is not a problem. The Fed's going to be ready with more stimulus if needed. So there's sort of like this fight going on between the bond market and the Fed. But these higher interest rates, the market does not like, and I think it was one of the main drivers of the selling in the stock market today.
Exactly. And tech stocks getting hit particularly hard, as we've mentioned all week. But I would say the very small silver lining at this point is if you've been following IBD, you may not be all too surprised or at least blindsided. It's never a day like today. Don't get me wrong. It's not fun, but we've been warning of this kind of thing in the higher probability of it happening.
Yeah, definitely. Everything from the investors' intelligence survey of newsletter writers. I mean, those ratings were above 60% for several weeks. They've kind of been, coming. Bullish sentiment has been falling. It's still elevated, but and just seeing a lot of stocks showing signs of climax tops that we've been highlighting on IBD Live, and just kind of excessive euphoria in the market. These big moves by GameStop and AMC, and so there's just a lot of yellow flags have been out there, and we've been saying with a light distribution day count for the S&P 500 and Nasdaq, it's still okay to have some exposure, but certainly should have been lightening up, and I think we've been saying lighten up for a few weeks now amid these yellow flags. So hopefully the selling that we've seen in recent days hasn't hurt too much, even if you've maintained some exposure to stocks.
That's right. Okay, well, let's take a look at a couple of individual names underneath the surface. Ken, you mentioned a strong earnings report for Nvidia, but that did not help shares today. That stock closing down over 8%, above average turnover here. And we did see a pickup in bottom line growth, in top line growth as well, 60+% growth for both of those levels for Nvidia. So it's no doubt continuing to turn in that really strong growth. But even the strongest of stocks, if you take a step back, when the market is getting hit very hard, most stocks are going to go the same direction as the overall market, and you can't really stand up to that broad carnage.
Yeah, some people don't understand how you can produce the growth that Nvidia is showing, and you talked about the latest quarter with revenue up 61% and earnings up 64%. And the thing about Nvidia was that their sales guidance for the current quarter was very bullish. They guided 5.3 billion in sales, plus or minus 2%, but the consensus estimate was for 4.51 billion. So it was significantly raised sales guidance for the current quarter. But you can see sellers in the stock in spades, and we added or we increased the Nvidia position when it crossed that 559.97 pivot there on that big update. Yep, yeah, and then it actually rallied pretty nicely. But we trimmed the position again. This was just not a good response to earnings. But weak market's going to bring just about everything down with it, even the quality merchandise. And Nvidia was not immune to the selling today.
Exactly. And elsewhere, let's take a look at Teladoc, TDOC, getting hit very hard today, down almost 14%. Also, heavy volume here, no surprise. But this is quite a string of pretty big losses for Teladoc. Like the broad market tried to find support at that 50-day line, but today really slicing through that level pretty strongly.
Yeah, and so this was another earnings report, and you look at 145% increase in revenue. I mean, there's this huge growth. It's not profitable yet, but it's going to turn its first annual profit next year in 2022. But it does have that new going for it, capitalizing on new conditions in an industry by being a provider of telemedicine services. And but this was just obviously a very bad response to earnings. One part of the conference call that was interesting is that the company forecast pretty much flat member growth this year, and for Wall Street has been used to seeing big increases in membership growth every year, which is a reason why Teladoc has been a strong price performer in the market. But their membership forecast for this year was, I believe, 52 to 54 million, and they ended 2020 at almost 52. So really looking at not much growth this year, and the stock paid a price for that forecast today.
That it did. But with that strong triple digit growth, and you said like it has the new, maybe a lot of these stocks have needed some sort of pullback or correction to set up in new bases. So maybe we'll keep this one on the back burner. Maybe it'll set up a new base in a matter of weeks or months. Only time will tell. But in the meantime, one area that is showing strength are some of these economic recovery plays. So GM did drop over 4% today, but by and large has been holding up relatively well during this pullback. Its declines coming in lighter than average volume, and it has seen some pretty strong gains over the last couple of months, a time in which many of the tech stocks that saw those big gains right out of the coronavirus crash have been lagging.
Yeah, I mean, the interesting thing about GM is that just recently the company said they plan to be all electric by 2035, and that's really not that far down, considering we're in 2021 right now. So I think the market is optimistic about that. And again, the stock was down 4% today. The selling was so intense in the broad market; it was pretty much hit every stock. But we switch over to the weekly chart here and just see what a nice test of the 10-week moving average looks like. It's in the bottom half of its range so far this week. So if it's truly a strong stock that is going to show some resilience here, maybe we can get a close in the middle half of its range anyway by the end of the week tomorrow. But so far, a pretty good test of the 10-week. You see a pretty classic breakout over a 46.81 buy point, and still holding nicely above that buy point and holding support. So this is one of the few bright spots in a day where we saw a lot of growth stocks seriously undercutting and violating support at their 10-week lines.
That's right. And given the current market environment, it's not a time to be aggressively buying by any means. So while a pullback to the 10-week is considered a potential buying opportunity after a stock breaks out of a base, what would turn this into potentially a buying opportunity for new investors versus a sign of strength for existing shareholders?
Well, just continued support at the 10-week line. I mean, again, a lot of stocks violated the 10-week line today. Saw a lot of sell signals. So if General Motors can continue to hold support here, you see a lot of bases. If this is eventually going to form a new base, and you'd like to see that base form with a move off the 10-week moving average. If it undercuts, it's not a big deal. But if it can form that base above the 10-week line, this is showing that it could still have potential to be a strong performer in the market.
Well, Ken, a final word to you to wrap up the show on what investors should be thinking about as we head into a final day of trade in a week that has been kind of all over the place and really tested a lot of investors and their portfolios.
Well, I mean, if you've been taking profits in recent weeks, and some of your winners, and cutting losses short, and some names that just haven't worked out. I mean, you're having about 20 to 30% exposure in the market is I know some people that are in that area right now, some people that are all in cash, and some people with a little more exposure. But when you raise cash, you can kind of shield yourself from these sharp declines in the market. But another thing we've been saying about, and I've been writing in the big picture, is that, listen, in healthy markets, stock screens give you no shortage of actionable stocks to buy. It's just like, well, look at this one, look at this one, look at this one. And for a few weeks now, it really has been tough. The screens really have just not been yielding anything. This is another topic that we've been talking about on IBD Live. So, be patient, let the market serve up the buys. Corrections, pullbacks like this, can present a lot of new bases, and believe me, there will be stocks left standing, and new leaders will emerge. So we're kind of in a tough time right now, but just staying cautious, favoring cash, waiting for the setups to present themselves. That's probably the best course of action for now.
Well said there, Ken. Thank you so much. And thank you all for tuning in. Of course, the conversation is going to continue on IBD Live tomorrow morning. So we hope you join us on our daily morning live stream. Our experts, we're going to share our screens, talk about overall market conditions in detail, as well as stocks underneath the surface and what that is saying about the broad market. We have portfolio management tips for you, tips for screening stocks, and more. So once again, join us, investors.com/IBD Live. We'll see you there tomorrow and right back here after the close. Thanks for watching.